Hello, good morning, and welcome to another live technical analysis. Starting off with the euro against the US dollar. As you can see, it is staying between the S1 and R1 support and resistance lines. The narrowing of the Bollinger Bands, in addition to the RSI remaining near the figure of 55, imply a neutral market sentiment. As such, we're maintaining our sideways bias for the particular pair up until the release of the retail sales rate for the US and the PPI rates. Now, the retail sales rates are expected to come in better than the previous readings and as such could escape the negative territory. Now, the PPI rates could potentially imply persistence in inflation pressures in the US economy. Overall, the financial releases stemming from the US today could potentially support the US dollar. As such, we may see the pair breaking below S1, and if it does so, we could see it taking aim for the S2 level at 1.0795. Now, in terms of the ECB, we note that ECB member Sonaris earlier on today implied that the bank may have to cut rates twice before the summer period. Yet, based on the comments made by ECB Sonaris, we're seeing no significant market reaction, as his comments are not perceived as predominantly market movers. But may be interesting considering the high number of ECB policymakers that are due to speak later on today. And in particular, we're highlighting ECB Vice President De Guindos, which is due to speak in the American session later on today. Nonetheless, should the rates come in as expected or higher, we may see the dollar gaining, so breaking potentially below S1. Next target could be S2 at 1.0795. Now, furthermore, should the ECB policymakers appear to be predominantly dovish in nature, we could see the euro weakening, further adding to potential downward pressures that may be attributed to financial releases and comments by policymakers. Over into the dollar against the Japanese yen. As you can see, it is resting on 147.75. So it appears to have broken the upwards moving trend line. We're maintaining a neutral market outlook, so a sideways bias for the particular pair. And as a matter of fact, I would be readjusting my support level to 147.40 simply because the price action was on S1, and if it's moving in a relatively sideways fashion, it may be more prudent to give it some room to breathe. For example, heavy support at this point. We're not saying that support may have not been found here. I'm just saying that if it's moving in a relatively sideways fashion, it could fluctuate in between the S1 and R1 level. And as such, I'm readjusting my support level, 147.40. Now for today, and what I might be spending most of this live doing is talking about Boeing. For those of you watching on X, you can see our latest tweet, which was done approximately, let's say, 15 minutes ago, referring to the continued troubles faced by Boeing. But more of that in just a moment. For now, we're going to be looking at the FX pairs, a look at the commodities as well, before moving on to Boeing, which is potentially the highlight in terms of your stock markets today. So, in terms of the British pound, sideways bias as well, staying between S1 and R1. I think we're all waiting for the retail sales rate, which is due to be released, and the PPI. So, essentially, I would maintain a sideways bias up until the release. If they come in lower than expected, it could weigh on the dollar. So the British pound could capitalize on a weaker dollar, take aim for R1. Dollar JPY, the JPY could also capitalize on a weaker dollar should the rates come in lower than expected, taking aim for S1 and S2, noting a high number of interest rate decisions taking place next week. So that may be interesting. But for today, we're going to be waiting the retail sales rate and PPI. If you would like to see how that potentially impacts the markets, we will most likely be tweeting at the time of the release. Dollar CAD, so the CAD may have gained a slight boost considering that it's an oil producing nation. So the increase in oil prices, as you can see, let's move on to the daily chart. Now, this could be attributed to the US weekly EIA crude oil inventories figure, which implied a greater drawdown than what was expected. So the inventories figure was expected to increase, but at a lower figure than the last week's one. So the drawdown implies that demand may be exceeding supply, thus potentially pushing prices higher, and thus may have allowed the loonie, so the Canadian dollar, to gain against the US dollar in today's trading session, well, late last evening and moving into today. For now, though, relatively sideways, narrowing of the Bollinger Bands, low market volatility. RSI near 50, 41 currently, does imply some bearish tendencies, but overall, sideways bias between S1 and R1. Moving on to the Aussie, uh, ties between Australia and China appear to be warming, if I'm not mistaken. The FM minister, the foreign minister for China, might be visiting Australia in the upcoming week, so the thawing of the relationship may better the relationship. But overall, interesting development. Let's see what happens. But for now, Aussie against US dollar, once again sideways between S1 and R1. Essentially, I think it's the same story everywhere. They're all waiting for the retail sales rate and PPI, which is due to release later on today, before they decide on a direction. In terms of oil, uh, so we're keeping support and resistance levels the same for the Aussie, cable, dollar JPY, and the euro. Onto oil. So it's broken above resistance, now turned to support 79.05. So this is now S1. 76.85 now becomes S2. So let's just change that quickly. Then S3, 74.20. Now, based on the fact that this is support turned to, resistance turned to support, we're going to be on the hunt for R3, which we had placed at a prior point, but I'm be readjusting as that was a bit too high. So what I'm looking for is this old high validated by this wick, two wicks actually, as resistance. Now up here may have been a bit too far fetched, so a bit further away from the price action. Might be valid if it breaks above R1 at $82 per barrel. So this is R1. Spending most of the time today probably talking about Boeing. So we're getting through the commodities fairly quickly as well. And then for R3, 87.90. That's for R3. So this is R3. You have R1, R2, R3. Overall, bullish outlook for oil, broken above a sideways moving channel, broken above resistance, now to support. You could even say this is an upwards moving trend line. Would need a third touch in order to be validated, but overall appears to be bullish for the price of oil. Onto gold. Now, as we said yesterday, it appears to have reached a limit near the $2,183 mark. Now, perhaps a small market correction lower, as we had said 2 days ago. It comes back down to S1, but the RSI remains near 70. Still bullish, so market correction, then moves higher. Would not be surprising due to the geopolitical risks that tend to persist on a global scale. For today, RSI above 70, bullish market sentiment, but could correct lower before moving higher. Overall, I would be overall bullish for the precious metal. Moving on, the S&P 500 appears to be moving in an upwards moving channel that we had placed yesterday. So bullish outlook as long as it breaks above R1 or continues to validate our upwards moving channel. This upwards moving channel was formed on the 18th of January. Furthermore, note this upwards moving trend line as well. So we have upwards moving trend line and an upwards moving channel, implying bullish tendencies. RSI running along the figure of 70 also implies a bullish outlook for the S&P 500. Nasdaq appears to be moving in a relatively sideways fashion between the tight range between S1 and R1, so 18K and 18.425. Maintain a relatively sideways outlook if it breaks below this upward moving trend line. If it does not, we could say bullish, but it has to break above R1. And now our favorite, Boeing. So, small recap: Boeing's been in the news for its, I'd say, production deficiencies. Quality control is subpar. There's a risk from the European Aviation Authority to potentially revoke Boeing's license, which could cause further downward pressures on the company's stock price during today's trading session. Furthermore, according to Reuters, an American Airlines flight, 77, a Boeing 777, earlier on today was forced to land at Los Angeles International Airport, or LAX for short, due to mechanical issues. Now, this is a series of events that have occurred regarding Boeing planes. The negative news sentiment surrounding Boeing could further weigh on the company's stock price. I would not be surprised if it breaks below S1 and takes aim for S2. Why? The news coverage is negative. It doesn't appear to be going away. There's also the risk of the FAA going to court with Boeing, the grand jury being assembled on Monday, the reports coming out from on Saturday and Sunday regarding Boeing. Then you have six issues with their airplanes within a week's time, which is very bad for a company that produces airplanes. Now, the saving grace I'd say for Boeing is that Airbus's orders are maxed out, so at full capacity up until 2030, if I'm not mistaken, which may have alleviated some downward pressures on Boeing. Overall, it's bad news. The net sentiment is bad. The outlook is bad in terms of the way it looks. So the optics. If you have issues with the airplanes you're manufacturing, it is possible that it could weigh on your stock price. So it breaks below S1, I would not be surprised at all. The news broke about an hour ago from Reuters, so you can simply Google American Airlines plus Boeing, and then filter that to the last 24 hours. That could potentially show you the article I'm referring to. It was by Reuters as well, so credible news agency, further adding to the legitimacy of the source. And as such, negative news sentiment could potentially weigh on Boeing stock price. Target S1, next target S2, and lastly, S341.50. Overall, I would be maintaining a bearish outlook on the company stock price. I've said it when the price action was here, again here, and overall, I'm maintaining a bearish outlook for the company stock price as the bad news don't seem to be ending for the company. Airbus could potentially gain. It's broken above R1, taking aim for R2. Now, let's see. Now, when was this? So, about 2 hours ago, could be reacting on the fact that orders for Airbus could increase. Now, why am I saying orders for Airbus could increase? One is in America, one is in Europe. Well, Boeing's main competitor is Airbus, as we've stated on numerous occasions. So if Boeing is looking pretty bad, and in terms of potential orders, if you have constant quality control issues with an aircraft, then it is possible that you may opt for your future orders to move with someone who is seen as potentially more reliable, which could be the competitor Airbus. So Airbus moving higher makes sense, in my opinion. It makes sense because they may capitalize on future orders from potentially disgruntled airlines that may be unhappy with the way things are being run in Boeing and may opt for another alternative, which could be Airbus. Overall, given that Boeing I'm bearish, I would be bullish on Airbus. Broken above, resistance turned to support. R1 163.30, R2 167.35. Let's see. And now we have to once again extrapolate the distance between resistance levels for R3, 409, 171.35, for R3, Now, the European regulators did say that they are, uh, not a direct quote, but implied that they are confident that Boeing may be turning the page, so to speak. But with the most recent incident with the American Airlines flight, that could potentially change. I think the sentiment is souring towards Boeing and increasing for Airbus. So positive for Airbus, bad for Boeing. We'll see what happens later on today. Nvidia continues to validate our upwards moving trend line. And once again, seems to be ready to take aim for another stab at the R1 resistance line at 955. Once again, as long as it maintains our upwards moving trend line, maintain a bullish outlook for the company's stock price, but it has to break above R1. If it does not, sideways. But for a sideways bias to occur, it would have to break below the upwards moving trend line. So if it continues to validate this upwards moving trend line, bullish outlook, and has to break above R1. If it breaks below, sideways between S1 and R1. If it manages to break below S1, so closing below S1, bearish outlook for the company stock price, potentially moving lower to 746.10, which is potential S2. Looking at Apple, market correction, came back up, might be moving lower. RSI at 31, bearish outlook as well. Bearish market sentiment in terms of the RSI. Downwards moving trend line could also be formed from this high, continues to be validated. Bearish outlook for Apple's stock price. Tesla has broken below S1, so this could be support turned to resistance. Once again, bearish for the company's stock price. RSI at 30, implying the bearish market sentiment appears to be persisting for Tesla. So that's R1, 207.70, that's R2, so R1 turned to R2. And same goes for R3, which was R2. Now, with this development, the breaking below of support now turned to resistance, we would have to look for potential S3, which is somewhere around here based on the price action. As you can see, I'd like to take swing lows. And then the opening of this bullish candle, so it came back, came down, found heavy buying pressure, and then moved higher, beginning of an upwards moving trend. Such potential support at 102.75. So that could be our S3. So I have R1, R2, R3, and then let's place S3 as well. For our bearish outlook to continue, we'd like it to see, would like it to break below S1, potentially taking aim for S2 at 126.65. But overall, a break below S1 would be sufficient for our bearish outlook to be maintained. S3. So S1 is to S3. Overall bearish outlook for Tesla. IBM continues to validate our upwards moving trend line. Bollinger Bands appear to be tilted towards the upside, implying a bullish sentiment in addition to RSI 60. One could say sideways. If it does not break above R1, switch for a sideways. I would switch for a sideways bias between S1 and R1. If it manages to, however, break above R1 and validates our upwards moving trend line, bullish outlook potential target 211.10, which coincides with R2. ExxonMobil, so as we said yesterday, bullish outlook breaking above R1. So maintaining that bullish outlook as this is resistance now turned to support. Let's readjust our support and resistance levels. Not worried about this bearish candle. I think it's coming back down to potentially test that this is indeed resistance turned to support before continuing on its ascent. Simply look at the RSI 67, implying strong bullish market sentiment. Upwards moving trend line appears to be validated as well. A bit of a concern with the moving averages should they cross over. So I have S1, S2, S3. and then let's figure out where our three might be. So feel free to chart along. Aha. Uh, all-time high, all-time high. Now we're a bit restricted on our three because we don't have any historical data. So what I do at this point is all-time high figure. Yes, it might be close to R2, but then again, it's the all-time high figure. So what we could do, we could find a more intermediate level of resistance, but that might not be valid. We have this all-time for resistance. It's too close to R1. I'll be keeping R2 at the same level we had before. Simply put, I think this is more of a resistance level. It's difficult to find something else. Keep it at the all-time high. But if it manages to break above the all-time high, bullish. Well, this is a more macro or forward-looking chart since we're keeping our support and resistance levels fairly spaced out. So this is R1. Then we have R2. Then R3 120.60. In terms of tomorrow's Asian session, we know it's a relatively going Asian session, nothing major expected to be released. Such market reaction could be from today's retail sales rate onwards, so that might be the predominant move up until tomorrow's European session. Back to ExxonMobil, bullish from a more macro perspective. USD Norwegian krona, relatively sideways between the S1 and R1 levels. If there's something you would like to see, let me know. Right now, looking at ARM, have a look at that in just a moment. Airbnb, if I'm not mistaken, news came out that they won't be allowing hosts to place cameras in the their properties. Whether that's bullish or bearish, it remains to be seen. Because it's a double-edged sword. If you allow cameras in the properties, you can easily claim, let's say, for example, damages made by potential tenants or customers, whatever you'd like to call them. If you don't, that might mean that the deposit could be higher, which could discourage people, or there might be another hidden fee, etc., which could weigh on the company stock price should less people use it. Let's just finish off with the chart. 787. Let's see. 174.50. Now, I'm not taking the distance between S1 and R1, S1 and S2 because it's simply too close to each other. And with that, if it breaks below S1, I would not be bearish. It would have to break below S2 as well. Simply put, a break below S1 would not be sufficient as it's too close to S2. So it has to break below two support levels before we would switch for a bearish outlook. 160.95, and let's just fix that on the S1 line. Nonetheless, our size at 60, so it implies there are some bullish tendencies in the market. But if you draw an upwards moving trend line, and I'm just using the opening and closing figures, I'm ignoring the wicks. Broke, dropped, came back up, wicked. I wouldn't be bullish just yet. I like it to see. I like to see it make a clear break above R1. So when I say clear break, this is not a clear break. This is a pierce. It pierced through. It tested that there was resistance and came back down. Tried again, failed. Clear break is, let's say this was resistance. This is a clear break. Higher. Closes above R1. That for me would constitute for a potential switch towards a bullish outlook for the company's stock price. If it fails to do so, first reaction would be sideways between S1 and R1, but if it closes below S1 and S2, so closes below and wicks, so pierces through S2, then I would consider potentially a bearish outlook for the company's stock price from a technical point of view. Now let's see, and then let's find R3. 182.80. Now, you might be wondering, in terms of the ECB policymakers, what may be implied later on today, and this is a simple expectation of mine, so it's my own personal opinion. I think based on what we've been seeing, so if you look at ECB President Lagarde's speech and press conference, in which I'd say the markets reacted relatively bullish to that, but overall it appears that the sentiment may be dovish. As such, should more policymakers be dovish later on today, could weaken the euro. Back to Airbnb, it has to break above R1. If it doesn't break above R1, sideways bias. Google, still bullish, aiming for R1. Zoom that in. If it breaks above R1, we continue to maintain our bullish outlook. Ferrari, sideways bias between S1 and R1. For F1 fans, once Hamilton joins Ferrari, we might see a boost. We see perhaps a boost to the company's stock price as they might sell merch, which could increase revenue, etc., etc. But that remains to be seen. UBS is broken above R1, 31.33, taking aim for 32.55. Bullish outlook for the company's stock price. 87 may imply that it is in overbought territory. Might be due a market correction down to lower ground, which could be S2. This is S1 now. Is there anything else I'd like to see? So we've done the Nasdaq, S&P. We haven't done the Dow Jones 30. So let's go back to the Dow Jones. It's broken above, and let's zoom in. This is the daily chart. Daily, as you can see, up opened on R1 support. Let's drop down to 4-hour time frame. Broke above, pierced. Bullish outlook for the Dow Jones. Next potential target for the bulls could be the 40K figure. It's a round figure, so there is a psychological effect potentially as well. Then potentially R2, 41K. And then we could place it at 43K for R3. Note the difference between the support and resistance levels that are roughly 1,000. Such, we could place R3 at 42,000, round figure as well. Oh, this is S1, not R3. And then R1, R2, R3. I think this is probably the last chart for today. But just before we close, I'm gonna have a look at Airbus, and I would like to see what time the move started. I do not know exactly the time when American Airlines declared an emergency and had to turn around to LAX, but I'm sure we might be able to see when. Simply look at where the market reaction began. So that's it for the Dow Jones 30. I have S1, S2, S3, potential resistance levels, bullish outlook, RSI aiming for 70, 63, so some bullish tendencies. And let's just look at Airbus and Boeing one last time. I think that could dominate once again the airwaves today. It's an opened. Let's drop down to a 30-minute chart. So it happened earlier on today. So I think it was 4 hours ago. Let's see. So this is the 4 hour candle. Look how it jumped. 1 hour, 2. I think 2 hours ago may have been the first major news outlet that reported on the incident with American Airlines. We go on to a 30-minute. So this was at 10 a.m. GMT plus 2. It's today. So once it opened, so once they opened, it jumped. Okay. Based on what I'm seeing with Airbus, so once the European markets opened, Airbus may have jumped on the news of Boeing. Once again, they're competitors. If it's bad for Boeing, it's good for Airbus. If it's bad for Airbus, it's good for Boeing. More orders, respectively, for each other. And given Boeing's continued troubles, may be concerning. Now, we can't really see pre market trading, so I would still be bearish. So, this is the 30-minute, 4 hour, 1 hour. Once it opens, we'll see how far down it goes. If it moves lower, personally, I would be bearish for the company's stock price. And with that, I think we're done for today. Thank you for watching. If you like more commentary, perhaps give us a follow on X, and I'll see you next time.
Okay, thanks for waiting, everyone. Let's go ahead and get started. So, welcome to this week's webinar on the second part of our Fibonacci series, which will be on Fibonacci extensions. So, before we get started, as per usual, a risk warning. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. A disclaimer: the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, So I'm Melanie. I'm an investment analyst from Everest Fortune Group, who were finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here is our agenda for today. We will do a brief recap of the Fibonacci retracement essentials that we went through last week. And then we'll look at ideal market structure. So what are considered significant swings, how you can follow market trends, and then the different Fibonacci retracement levels, followed by this week's Fibonacci extension slides. So then we'll look at Fibonacci confluence and how you can combine what we learned last week, so Fibonacci retracement, with this week's extensions. Okay, feel free to let me know in the chat throughout the webinar if you guys have any questions. Let me just change the settings so that you can ask me in the chat or Q&A. Okay, should be okay now. Okay, so let's get started. So starting off with a quick history lesson on the origins of Fibonacci. So Fibonacci retracement levels were named after Italian mathematician Leonardo Pisano Bigolo, who was famously known as Leonardo Fibonacci. So, however, he did not create the Fibonacci sequence. Instead, he introduced these numbers to Western Europe after learning about them from Indian merchants. So, Fibonacci retracement levels were formulated in ancient India between 450 to 200 BCE, and the sequence is also referred to as nature's numbering system. It's often observed by known people in flower patterns, hurricane patterns, and galaxies. So here's our recap on last week's Fibonacci retracement. So a very simple checklist to follow when you're first starting out with Fib retracements, and I guess some things to look out for. So firstly is the market structure clear. So we want to look for big zigzag patterns, and we'll show you some examples in the coming slides. Next, we're looking for recent trends. So we want to identify, is the trend going up or down? And it's always important to follow the general trend. Next is to identify recent major swing lows or recent major swing highs. Again, we'll show you some examples of those. And we want to connect the two extreme points like you see in this slide here. So we're starting in this example because it is a downtrend. So we're starting from the highest point and then ending at the lowest point for a downtrend. And then if it's an uptrend, we're looking at the lowest to highest points. So here's an example of a clear market structure. Okay, so although Fib retracements and all the different Fibonacci techniques can be used in both choppy and trending markets, it's still important to look for clear market structures regardless of what technique you are using. So here's an example of a clear market structure, and here's an example of an unclear market structure. So one of the ways to identify a clear market structure is actually by adjusting the time frames in order to get a clear market structure for you to conduct your Fibonacci analysis on. Okay, so what might look messy on a M30 chart might actually look very clear on an H4 chart. So if there's too much chaos in the shorter time frames, it doesn't mean that the entire currency pair is not able to be analyzed at that point in time. So it just could simply mean that you need to take a step back or sometimes a step forward to get a clearer view. So in this example, you can see we have a pretty unclear market structure from the 15-minute time frame. So it's quite messy. There's no clear movements in price, and when we change it to the 1 hour time frame, you can see that the highlighted portion has a much clearer market movement. Okay, so there's basically two criteria that you should look out for. Firstly is a clear swing low. So the clearer the swing high, the clearer the trend between these 2 points, and the more accurate your Fibonacci retracement will be. Okay, so I guess now we'll briefly go through what conditions to look out for when we're using the retracement tool and how we can use it on both MT4 and TradingView. So if we have time at the end of this webinar, I will do a brief market analysis. Feel free to let me know if you have any requests in the chat, and we can do a bit of Fibonacci analysis on TradingView as well. But starting off with MT4. Okay, so here's just the layout on MT4 if you're unfamiliar. So now let's zoom into our toolbar. So when you hover your mouse over this option, where my mouse is here, it should say draw Fibonacci retracement. So you just click on that, and you can click on wherever you want your Fibonacci retracement to be. So it should come out looking like this. And if you want to add or edit any Fibonacci levels, you simply right click on the Fibonacci trend line, and then so it's pretty faint over here. There is a red dotted line. Yeah, but this is what you will get when you right click on it. So you click on Fibo properties, and then under the Fibo levels tab, you can then click add, and you can proceed to add whichever levels you wish. Okay, so here you can see, yep, it'll look like this. I click add, and then I've added a negative 0.618 level, which is essentially just minus 61.8%. Okay, so now looking at Fibonacci retracement tool on TradingView. Okay, we have a typical layout. In this case, we're looking at pound dollar for this example. But basically, you click on the Fibonacci retracement tool, which is the symbol with the four horizontal lines over here. So you can find this, I think you can find this on the top bar or the sidebar. Yeah, here you can see I've circled it out. And then after you've connected your Fibonacci trend line, this floating bar will pop up over here. So when you click on settings, this selection box will appear. So you can select any other levels that you wish. So if you weren't here for our previous Fibonacci session, I'll show you guys in a little bit, but depending on which Fibonacci technique you're using, we will look at different levels. So let's say in this case, I'm looking at all of the relevant levels from negatives to more than 100. And when you're first analyzing the levels, you want to kind of select both negative, mid-range, and above 100 so that we can view all three Fibonacci types at once. So this is what I mean here. From minus 61.8 to 161.8. So the negatives are what we call Fibonacci expansion. Okay. Today we are going through the above 100s, which are the Fibonacci extensions. So we are using the 127.2 and the 161.8. And next week we'll be looking at the expansions, so the negative levels. And last week, the retracements, we looked at the mid-range levels, so 23.6 to 78.6. Okay, so yeah, we'll go through expansions more in depth in the next webinar. So I'll just briefly introduce these levels now. And if you look at the GIF that I've included here, this is the kind of shape that we're looking for. And this is how exactly you should draw your Fibonacci retracements. Okay, another example here, you can see all the different Fib numbers that we mentioned in the previous slide and how it looks drawn out. So basically just take note of the starting point and the ending point of your Fibonacci trend line. So in this case, you can see the general trend that we're looking at is a downtrend. So the starting point is 100%, ending point 0. Okay. In this case, this is also another example, and we can see that price bounced off the highlighted area of 61.8% at the Fibonacci retracement level here. Okay, here's another example. In this example, we're looking at the 38.2% Fibonacci retracement level, and this is in line with the overlap support at the 32544.21. So you can see price bounced off of this highlighted area here. So if you are unfamiliar with what an overlap support is, you can stay tuned for our support and resistance webinars where we go really in depth into overlap and pullback support and resistance. But really briefly, overlap basically means that there are swing highs and swing lows that match up at the same level. Okay, and those tend to be really powerful or really significant levels, especially if they line up with a Fibonacci level like we have over here. Okay, another example here. So here we have two Fibonacci retracements. First one is from the top to the bottom over here. And we have 61.8% that lines up with our 0.92637 level. Okay, and next we have another level, or rather another retracement from the bottom to the top over here. And we have 61.8% Fibonacci retracement again that lines up with the 0.91614 level. Okay, and for this level, we actually have it matching up with two swing lows. So this makes it a pretty significant level. Okay. Okay, just a really brief example of an expansion. So for an expansion, we are looking for a flash kind of symbol or lightning bolt symbol. So here you see in this example, it kind of looks like a lightning bolt from the arrows. So starting point is here, ending point is point 2. And here we're looking at the negatives, as I mentioned earlier, for expansion. So expansion, we're looking at minus 27.2 as well as minus 61.8. So in this example, we can see the 61.8% lines up with this swing high here. So we're expecting price to bounce off of the 61.8% level. Okay, and we're projecting it to hit down towards the minus 27.2%. Okay, and you can see this is the outcome of that. So you really have confirmation that price is gonna hit downwards once price breaks out of your initial ending point, which is at point 2. So that's how you combine a Fibonacci retracement with your Fibonacci expansion, since they both use the same tool, just that we're looking at different levels. Okay, so you can see here, once price broke below our ending point at point 2, we have confirmation that it's going to hit towards our minus 27.2, which it did, and it bounced up nicely from the minus 27.2% Fib retracement and hits back up to the ending point, which it normally does after bouncing off either the minus 27.2 or the minus 61.8. Okay. So let's get into this week's Fibonacci extension. So here is an example of price reacting off the 161.8% Fibonacci retracement level, resulting in a reversal. So in this case, extensions, we like to look for Nike tick shapes. Starting at the starting point will be here, ending point over here. So we are taking, how you draw your trend line is you're basically drawing the head of the tick. Okay, and the projected level is either 127.2 or the 161.8 like we see here. So price has broken out of the 127, so we're projecting it to bounce off of the 161.8, which it did, and results in a reversal over here. Yeah, before we move on, I'll just show you guys the Forex Army page. let me see. Okay, so in this website, you can see how exactly you can draw a Fibonacci retracement correctly. So, yeah, basically everything that I've gone through today, last week, or future webinars, most of the information will be over here. So you can see the clear structures that we went through earlier, how you can follow price structure, yeah, and this clear steps on how to draw your Fibonacci retracement, some examples. So feel free to check out this website after this webinar. Yeah, it also goes through Fibonacci confluence, which might be a little bit confusing since we are combining all the techniques. Yeah, so you can see over here, we have a bunch of examples. So yeah, let me just pop it into the chat for you guys. Okay, now let's look at when does a Fibonacci retracement become invalid. Okay, here. So one of the most common scenarios of this is when price makes a lower low. So assuming you are drawing a Fibonacci retracement from the top to the bottom, or if there are bars on the right that break your ending point, then it becomes invalid. So I think we have a bunch of examples of this later on. Yeah, so just because it becomes negative doesn't mean that it is invalid, because we've already gone through that Fibonacci expansions are negative levels. Okay, but I'll show you guys some examples later on. Okay, let's combine some Fib retracements. So we have three different methods here. Firstly, we have the minus 27% Fib expansion, and this lines up with a 161.8% Fib extension, and then the 78.6% Fibonacci projection. So what we want to take note of from this example is basically the shape of all of these trend lines. So firstly, the extension, you can see the Nike tick. Over here, it's kind of an inverted Nike tick. So the head is here, the gray arrow, and then the tail would be the long black arrow. Fibonacci projection also uses a lightning bolt shape similar to the expansion, so you can use those together. So Fibonacci expansion, you can see the trend line that we are following from the red arrow, and then for Fibonacci projection, we are looking at the black arrow. Okay, and we can see that price bounced off of the Fibonacci confluence area over here. So that's how you use confluence. Another example, here we have 61.8% Fibonacci retracement matching up with a 100% Fibonacci projection. So in case you can't see the lightning bolt shape, I've drawn out the arrow. So the yellow arrow here is the Fibonacci projection, and the blue arrow, which is just a one straight line, is your Fibonacci retracement. Okay, and we can see price bouncing off of that confluence area there. Okay, another example here. So here we're using retracement and projection. So the 23.6% Fibonacci retracement is just one line following from this bottom here to the top here. And that is in line with our 61.8% Fibonacci projection. So for projections, it's 3 points. So we have a starting, middle, and ending point. And we can see price testing this level here. Okay. Okay, so let's backtrack a bit and look at what exactly how exactly you can use these retracements. So how do you identify clear market structures? Firstly, we want to look for significant swing highs, swing lows, significant trends, or clear market trends. So let's first look at an incorrect example. Here's an example of insignificant swings, which are bad points to use for fib starting and ending points. So you can see it's really messy, the price movements are too small, and there are no significant swing highs or lows. Another example is over here. So there's no clear swings, no clear market structure. Price movement is too small to use any kind of Fibonacci technique here. So here is an example of significant swings. Okay, we have a clear move up and down. We have obvious peaks and troughs and very clear market movement as well. And here's another example. So I've drawn out the peaks and the troughs to show you exactly how clear it should be. Okay, and following the market structure. So we want to pick market structures with a clear upward or downward movement. So your Fibonacci retracement trend line can follow that movement. And this works better on higher time frames due to there being less noise. So by higher time frames, we mean H1 onwards. So H1, H4, daily, weekly, depending on your trading technique as well. Okay, so you can see this is an example of not following the market structure. So this is how not to draw a fib retracement trend line. You can see we have a zigzag here, okay, but instead we are drawing a fib trend line through the price structure, when instead we should be following it exactly. Okay, so when your retracement is cutting through the market structure, it makes it less effective. Okay. Okay, so for our Fibonacci extension, getting back to this week's topic, again, the tool that we use is Fibonacci retracement, and the percentages are 127.2 and 161.4. And here we're looking for a Nike tick, like you see in the GIF here. Okay, and these tend to be quite powerful setups. If they don't react off of the 127.2, then we're likely expecting it to react off of the 161.8. Okay, and these usually retrace the entire move from point 1 to 2, hence the retracement tends to be more than 100%. So the clearer the movement of the Nike tick, the better. So you can take a look at this GIF over here. So you can see it did test the 127.2 slightly, but it still broke out of it and reacted off of the 161.8 before reversing back down. Okay. Okay, so another example here. So for fib extension, in this example, we are looking at it reacting off the 161.8. And then we see a reversal here. I think we saw this earlier, so I'm going to skip that. Here's another example. So this is on the daily time frame. And you can see that there is a swing high that's in line with the 127.2. It's quite small. So these, obviously, the clearer the Nike tick, the better. But if you have a small movement like this, that works as well. So if we zoom in, because this is on a daily time frame, so if we zoom in and view the same chart on a H4, we can get a clearer view. Yeah, so you can see here the Nike tick is a lot clearer. Okay, and this is on the same chart. So we can see how price reversed nicely off the 127.2% fib extension level here. Okay, and here earlier I briefly mentioned an inverse Nike tick. So in this example, you can see it a bit clearer. Starting point here, ending point here, and then the tail would be from the 0% all the way down here. Okay, so as long as it retraces 100% of the tick, then it can be considered um then it can be considered a tick. As long as it reverses 100% of the V shape, then it's considered a tick. So we want to take note of the swing low support at 0.91565 in line with the 161.8% level. Okay, so this makes it a strong support level where price bounced off of. Okay, so we'll talk a bit more about combining the different FIB methods as well as the support and resistance levels so that it increases the accuracy of your analysis. Okay, let's move on. So we talked about invalid Fibonacci retracements earlier. Okay, and I did mention as well that the Fib retracements that are negative are still valid. Okay, and this is an example here. So our starting point is here, ending point here. Price breaks our ending point as we see from this area over here, um, under the red arrow that I pointed out here. And once it breaks out of it, it's no longer valid. So basically, when it breaks out of your 0.0% level and has made a lower low, that's an example of an invalid retracement. So you want to remember to always pick the lowest point with nothing on the right of the ending point. So your ending point is here. We don't want anything lower than that over here. Okay. Let's quickly get into Fibonacci confluence. We briefly talked about it, but I'm gonna get a bit more in depth into the extensions. Okay, so we looked at this example earlier, but it's basically multiple Fibonacci levels. It doesn't have to be retracement only. As long as there are Fibonacci methods that line up nicely, it's considered confluence area. So you're basically lining up these levels so that you can increase the probability of a bunch of Fibonacci levels working versus a single Fibonacci level working. Okay, so yeah, we looked at this example earlier. So in this example, we have two fit methods. Okay, I mentioned earlier the Fibonacci extension, which we just went through, and the Fibonacci projection, which uses a lightning bolt symbol. So our 61.8% Fibonacci projection, like you see here, lines up with the 127.2% Fibonacci extension. So the Nike tick, if you can't see, the head of the Nike tick is from here, this swing low to this swing high. And because it has surpassed 100% of it, or it's retraced 100% of that, the head of the V shape, then we can use it as our extension. And for our projection, we are looking at this starting point here, middle point here, and ending point at the swing high. Okay, for projections, we use 61.8, 78.6, and the 100%. So here we're looking at 61.8, which lines up nicely with our 127.2% extension level. Okay, and you can see how price bounced off nicely off of that level. Okay, but in this case, you can see it's just the wick of the candlestick that's just touching that area. So we'll go through in a bit how exactly you can maximize your chances of catching this reversal since it is just a candlestick wick. Okay, next let's look at another example. So here we also have two Fibonacci methods. We're using extension and projection again. Our extension here is not an inverse extension. Okay, so we have the hit, the starting point at the swing high, ending point at the swing low, and it is past 100% of the V shape, as you can see here. So that's why we're looking at 127 and 161.8. Fibonacci projection wise, we are looking at the lightning bolt shape again. So starting point here, middle point here, and ending point here. Okay, so 100% Fibonacci projection lines up nicely with our 127.2. In this case, we can see that our 100% also lined, or rather our 78.6 Fibonacci projection also lined up nicely with the 61.8% Fibonacci retracement. Okay, but it already surpassed that, so it's no longer valid. Okay. Okay. Last example, I think. But basically in this example, we are looking at an expansion and an extension. So for expansions, remember we're looking at the negative levels. So for expansions, we're also looking for a lightning bolt shape. So the lightning bolt shape is like this. The minus 61.8% lines up nicely with our 161.8. So you can see that the minus 27.2 expansion also lines up nicely with the 127.2. So when we identify these two confluence levels, we would first wait for price to break out of this confluence area before going in for buy towards this confluence area here. Okay, in this case, obviously it broke out of it, so we were going for that buy. But if we didn't know that it was going to break out of it, we would first going for buy towards this area here first. Okay. Okay. Okay, this is our last example. So in this example, we have the minus 27.2% expansion, which is the blue arrow. Okay, and that lines up with our 100% Fibonacci projection, which is the lightning bolt shape. Starting point, middle point, and ending point, as indicated with the orange arrows. And then the purple is our Fibonacci extensions, or in this case, we have an inverse Nike tick. Okay, so we have minus 27.2, 100%, and 127.2 lining up. So we can see that price bounced off nicely off of this very strong support level. Okay, so normally you would try to get as many Fibonacci techniques as you can, lining up at the same level, because that gives us a stronger confluence area. Okay, so it's a more effective indication that price is going to bounce off of that, or reversal is going to happen. Okay, so let's talk a bit about trade management. So earlier I showed you guys how sometimes with confluence areas, you can expect a very brief reversal. So a very brief touch on our confluence area before it starts reversing off of it, especially when you have a very strong confluence area with multiple Fibonacci levels lining up on it. So in order to avoid missing your trade, this is the trade management technique that we like to follow. So firstly, your stop loss will be placed beyond. So this means that you would place your stop loss beyond a key Fibonacci confluence area. So the reason for this is because more often than not, price is attracted to such strong areas of confluence, and if your stop loss is right before instead of beyond it, you will most likely get stopped out before the market reverses. So that's basically what I mentioned earlier. In this example here, um, we're going in for a buy. Okay, so our stop loss will be placed below your Fibonacci confluence. And your take profit, we recommend you to place it before. So in this case of a buy entry, we would place our take profit below the confluence area. Okay, obviously these will be switched if you are looking at a sell entry. But yeah, basically The standard rule is that stop loss will be placed beyond a key Fibonacci confluence area and a take profit will be placed before it. So before means that you should place your take profit, in this case, below the confluence area. Reason for this is because when price reaches the confluence area, there's a high chance that it will not be able to go beyond it. And instead of reaching your profit target, it might reverse back to your entry or even worse, your stop loss right before it reaches your take profit. Okay, so that's also one of the reasons why people complain that the market is being manipulated because they miss their take profit by 1 or 2 pips. Okay. Okay, let me know if you guys have any questions. We still have a bit of time. So I'm gonna pull out my charts, and if you guys have any requests for any currency pairs you'd like me to go through, feel free to pop them into the chat. Okay, I got a request for okay, DOW30. Let's go ahead and look at that. Mm, can you just really quickly drop the ticker in the chat? I can't seem to find it on TradingView. Is it this one? Is it this? Okay, let's go ahead and analyze this first. Can you guys still hear me? Okay, let's continue. So, let's start off by looking at it on the higher time frames. Okay, so okay, we can see a general downtrend on our daily time frame. Let's look at our weekly time frame. Okay, weekly time frame is pretty bearish as well. Okay, okay, I'm just gonna go in and add some support and resistance levels. So here's our first resistance. Here's our first support. And here's our second resistance. Okay. Okay, let's look at our 4-hour time frame. So we kind of have the same levels here. This is our first support. Yeah, okay. Okay, let's look at Dow Jones. Okay, so same thing, we're gonna look at the higher time frames first. So it's pretty bullish, okay, on our weekly time frame, on our daily time frame as well. Okay, here is our first resistance. Okay, this is our first support, and I think this would be our second support. Okay. So if we're looking at our retracement, we're looking at the mid-range first. So we have these 5 levels, 23.6 to 78.6. And I can see that my 38.2 lines up nicely with my first support. Okay. Let's see. Okay, let's look at this on our 4-hour time frame instead. Okay, it's pretty similar. Okay, now I'm gonna look at a projection. So for projection, we use these 3 levels. Okay, and okay, actually here I can show you guys an example of a Nike tick. Okay, we're looking at the above 100 levels. Okay, so 127.2 and 161.8. And you can see the shape of the Nike tick here, right? So it's surpassed 100% of the V shape, which is why we can use it. And you can see price actually rebounded off of the 161.8 level, just as we suspected or would expect. Okay. So yeah, that's an example of the Nike tick or Fibonacci extension that we went through today. Okay. Let's see. So because of that reversal of the 161.8, we can expect it to continue to go down towards this level now, um, which is our 23.6 level. Okay, so I might just put an indicator there. Let's see if we have previous levels. Okay, kind of have this level here as well. This would be just an intermediate level, okay, that I'm expecting price to hit towards. Okay, now let's look at some indicators. So I like to start off with Ichimoku and MACD. So if price is moving below the Ichimoku cloud, it is a bearish signal. And if it's moving above, then it's a bullish signal. So in this case, we see price moving above, so it doesn't support um our analysis that price is going to drop down to this level here. Okay, so I'm going to get rid of that. And MACD, you can see that it does support my analysis. So I can keep that. And let's look at RSI and stochastic. RSI, you can see very obvious downtrend. So it also supports my analysis. Let's look at stochastic. Okay, stochastic as well. Okay, let's look at maybe Bollinger Bands. Okay, so you can see that on our Bollinger Band, price is moving out, or it's breaking out of the bottom band of our Bollinger Band. So it's also supporting our bearish analysis. Okay, so out of the five, 1, 2, 3, 4, 5 indicators that we've used, 4 out of 5 of them have given us a bearish signal, which supports our analysis. Okay, so because there are so many indicators, 50% of them will give you bullish and 50 will give you bearish. So it's important to just learn a couple that you're comfortable using, that you know how to use, and then stick with those. Use those interchangeably to support your analysis. And yeah. Okay, any other requests? I think we have time for maybe one more. Okay, no worries. Okay, let's look at gold. So on our weekly time frame, it's pretty bullish, right? On our daily time frame, also pretty bullish. Um, okay, there's not a trend line, but let's see if we have a trend channel. Okay, I think we can see price breaking out of the trend channel. Okay, we might see it break out a bit. Okay, let's go in really quickly with some levels. So this is our first resistance, our first support, and our second support. Okay, on our 4-hour time frame, okay, I'll just show you guys an example of a Nike tick again. Here, okay, you can kind of see this Nike shape or tick shape. Okay, and you can see it bouncing off of the 161.8. Okay. Yeah. And Okay, so this would be my first resistance. Um, this is my first support, and then my second support here. Okay, so going in with a projection again, it's in line with my 61.8. Mm, okay, my 38.2 lines up with my first resistance. Okay, and okay, I think that's about it. Okay, so my 23.6 also lines up with my first resistance, and so does my 61.8. Okay, so we have this confluence area here. And this is also a pretty significant level of overlap, okay, because we have a bunch of swing lows lining up as well. Okay, now let's pull out some indicators. Okay, price is moving below the Ichimoku cloud, so it's giving us a bearish signal. MACD is also giving us a bearish signal. If we look at RSI, okay, RSI isn't telling us much. Let's look at stochastic. Oh, okay, so we have a bit of divergence here. So price has made a higher high on our price chart, whereas on our stochastic, it's making a lower low. So this is a bearish divergence and could suggest that price is going to continue to break below our first support. Um, yeah, but we'll have to see because this is a pretty significant level here. So you might see a bit of a jump. Okay, if I zoom in, you can see price already increasing here. But ultimately, because of all the downward pressure, we might see it continue to drop below the first support. Okay, maybe let's look at moving averages as well. Okay, so the SMA and EMA price is moving below both of these indicators and it recently crossed over each other, which could suggest a change in trend. And it's been pretty uptrend recently, and now we're seeing a downtrend. So that could be because of that. So also supports our bearish um, analysis. Okay. Okay, I think that's all the time that we have for today. Um, Let me see if we have any other questions. Okay. Okay, if there's nothing else, thank you guys so much for joining me today. I hope you guys found it helpful. Have a great rest of your week, and I'll see you guys next week. Bye, everyone. Thanks, everyone. Bye.